Hi everyone, today I want to speak to you about the Toronto housing bubble. The media has been all over this, and rightfully so. We've had nearly a decade of highly inflated home prices here in Toronto and even in places like Vancouver. Let's understand how we got here. We were in a situation where house prices were reasonable, interest rates were low, you can amortize your mortgage over a 30-year period, and we also had foreign investors coming into the country and spending a lot of money. Now I really want to understand if we are in fact in a housing bubble. So let's take a look at some stats. To purchase the average house here in Toronto, which is approximately $873,000, a buyer would have to be amongst the top 10% of local earners here in Toronto. There are two ratios that I want to dive into. One is the house price to rent ratio, and second is the house price to income ratio. The home price to rent ratio determines whether it's cheaper to rent or purchase the same property. The house price to income ratio is an affordability measure. It takes into consideration the median price of a house and the median income. Now, when we look at these two ratios, we can determine if we are in a housing bubble or not. The house price to rent ratio is at nearly 195%, and the house price to income ratio is at nearly 150%. These are the kind of levels that were noticed during the 2008-2009 recession in the US, one of the factors that led to the housing crisis. Now, when I step back and determine who's impacted by this, there are four parties. There's the current homeowners, potential first-time home buyers, real estate investors, and financial institutions. First, let's talk about current homeowners. I think there are two types. I think there are the people who purchase homes, for the purpose of living and growing their families in it, paid a fair market value for, and then there are the types who purchased these houses in 2016, 17, and paid a premium for it. People who paid 120, 130, 140% of the asking price. Next, we have the first-time home buyers. Now, these people I would say are in an advantageous position because if the so-called bubble does burst, they would be able to purchase a house at a very reasonable and affordable price. Next, we have real estate investors. See, as a real estate investor, if you've done your due diligence, you're likely making money and you're making cash flow on your existing properties. And you likely have a long-term strategy, and these market bubbles are temporarily. They come and they go. So if you're in it for the long run, I don't think you're really impacted by this. Now, unless your investment strategy is to purchase and flip, I think if your time frame falls within the 1 year to a year and a half mark, that's when you're hoping to flip your property. I would say it's time to do some sort of stress test on yourself. If market drops by 20-40%, are you still profitable or not? It's just better to be educated on this process. Now, with financial institutions, I think there are the correct rules and regulations in place right now to make sure that loans are being handed out to people who can afford them. I would just expect low activities for financial services, less people purchasing homes, less people selling homes. And lastly, the biggest thing would be, if you have situations where the homeowner was someone who paid a premium and now they're defaulting on their mortgage, now the bank's going to have a huge financial obligation that they need to offload off their balance sheet. And this is where I would see a difficult situation for the bank to be able to not lose money. I think that the Canadian housing market is in a situation right now where it's slowly correcting itself. So you may see, listings sitting out on the market for longer than usual, which I think is normal around this time of the year. But again, that comes with consumers and what consumers want and what kind of education they have. Right now, a lot of consumers are pricing their homes based on what they have seen in 2016, 2017, which is not the market today. I would say that the moral of the story is to be educated and is to look at your current situation and determine what your goals and objectives are. If you have a short-term goal, I think you need to go to the drawing board and determine if there is a 20, 30, 40% correction, are you in a safe situation or are you not? So when I think about the bubble, the people that I'm most worried about are people who purchased their house between the 2016-2017 period and people who paid a premium for their house, people who paid 120, 130, 140% of the asking price. If you would like to discuss this topic any further, feel free to get in contact with me. I'll leave my contact information down below.